Hey traders, welcome to episode 1 of the market structure series. In this episode, we will be covering the basics of market structure, identifying all the different components that identify a trend, identify the continuation of a trend, and discussing all the different points within a trend. In next episodes, you can expect more in-depth and advanced techniques, identifying the strength of a trend, identifying change of character, and stuff like that. Okay, let's get started. We all know trends. We know the bullish trend, we know the bearish trend. But what exactly identifies this bullishness or bearishness? Well, let's look at our first example here. So here on the left, we can see an example of a bullish trend. We can all see that price is moving in an upward direction. So it's very easy to say that this is a bullish trend. But why? Why exactly do we call this a bullish trend? And what are the important factors? Well, let's start in the beginning. So first we create a low. This is an imaginary low. Then we create a high. This is one leg. Now we move down and we identify that this is apparently the low of this leg. And we move back up. This leg that moves up creates one very important aspect. It breaks structure. And why does it break structure? Well, let me show you. Here we had this previous high, or at least what we identified as being the previous high. And here we created a low. As soon as we violated this high, that's our break of structure. We broke out of previous structure. We went upwards if we compare it to that previous high. We proceeded to create another high, and we went down again. And then we went up again, and we again had that break of structure. All right. So now, this break of structure is probably the most important thing when it comes to trend analysis. Because what does that create? As soon as we have a break of structure, as soon as we are at this point, and we break previous structure, we break that previous high, we can identify our previous high, and our higher low, our previous low. As soon as we have it again, at a higher high, we can then again identify the higher high and the higher low. And a higher high is basically just a high that's higher than its previous high. A higher low is a low that's higher than its previous low. Of course, this high is just a high because we do not identify a previous high here. We have to start somewhere, right? And this low is just a low because we didn't have a prior low. All right. And then, of course, when we move up into an upward direction, we are creating a potential new high. That's what we expect, at least. All right, let's move on to the bearish example. So first off, we start with a high. Then we create a low. From that low, we create a lower high. At this point, we don't know that yet. As soon as we break structure, right here, we then know that this was the lowest point of that pullback, and we created a lower high compared to this high. That's why we identify that as a lower high. Then we proceeded to make a low. We don't know that this is the lowest low yet until we break structure right here. We then identify this as the lowest low and this lower high. And then again, we proceed to make a potential new low. That's what that stands for. Because we are in a bearish trend, that's what we expect. In the next episode, we will talk about when we can start identifying or thinking that the trend is about to change. That's not for now. Let's stick to the basics. Cool, but now let's move to a bit more of an advanced and realistic example. Because of course, as you can see, this is picture perfect trend. We can all identify this as a bullish trend. We can all very easily pinpoint these points right here. This is just the basics. Now, let's move on to a real life example. Trying to fit that on the screen. Alrighty, so right here again, we have an example of a bullish trend. We have an example of a bearish trend. Very good. Now, I already drew out all the significant points, but we'll go through them just once again. So what do we start with? We start with a low. Continue to make a high. We then go continue to make a new low. And we know that that's the higher low as soon as we break structure right here. And all of these other points, let's draw them out. All of these other points, like this one, or this one, this one, this one, this one, it's all insignificant. Why? Because we did not break structure yet. We cannot identify this as a lower high or this as a lower low because we never broke the structure from our previous high. At that point, we cannot identify this part as a bearish trend. And that's very important. It's something I need you guys to understand. That's where a lot of people fail. A lot of people start to think as soon as they see this kind of pattern, the trend is starting to turn bearish on them. You need to look at the bigger picture. You need to identify those strong zones. And only when you see a break of structure, you can start identifying those previous points. So as soon as we had this break of structure, we could identify this as a higher low and this as the previous high. Okay, let's go on to the next one, a bit more complex. Because here we had this smooth one leg up. This is a bit more of a complex one. So we start off with our new high that we created. We then move down. We have this, let's call it lag and randomness to the downside here. We then create this low right here. Then move back up. And here we have a break of structure. As soon as we have this break of structure, we can then identify this as being a higher high compared to its previous high. And this low being the lowest low, respecting the previous low, being a higher low. So not this low, not this low, not this one, not this one right here, because that's the lowest point. But it's still higher than the previous low, so we're still respecting our trend in general. And that's why I identify this as the higher low. Okay, cool. After the break of structure, we then move back up to create a new high. Then move down. Create almost equal lows. This low is a bit steeper. Then we move up again, create that break of structure, and then our new potential high. And as soon as we have this break of structure, we can then identify this being the higher high, as it's the highest point, not this one, not this one, no, this one. And then we can also identify our higher low, still respecting, not going all the way down here, no, respecting our previous low. That's why it's a higher low, not a lower low or an equal low. Cool. Let's move on to the bearish example then. So we start off with a high, we then make a low in one clean leg. We then move up to the upside, create a lower high. And then again, one leg down, a clean leg down, breaking structure. At that point, we can identify this as being the lower high, this as being a low. And then as soon as we create this point and move up and then move down again and break structure, at that point we know that this is a lower low compared to that low. This is a lower high compared to that high. This being the highest point, not this one, not this one, not this one, no. Highest point. Cool. And I hope after watching this, you get the picture. If you don't, I really highly recommend rewatching this. You really need to get this down. This might be one of the most important skills you can have in your technical analysis. You need to get this spot on. Something that I really recommend people to do is to start drawing this on every single chart they see. In the next episode, what we will do is we will do exactly what we learned here. We will add that to a real life chart, which is probably going to look quite similar to this. And we'll also talk about more advanced concepts as trend changes, change of characters, trend weakness, identifying equal lows, and possible reversals. And if you master this full series, you will already have an edge in the market, because at that point you are trading with the market and no longer against it. And if you trade with the market, it's almost inevitable that at one point you will start making money. Cool. If you would like to see these next episodes, make sure to subscribe, turn on the bell notification thing to get notified when the new episode is here. Anyway, guys, thanks for sticking around. I wish you guys a lot of luck in your trading journey. Hope to catch you in the next episode.